Hello, 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 hello. Hello, guys, and welcome. Just let me know if you guys are able to hear me and, of course, watch the stream clearly. Adivat is there. Resident is there. Hello, guys. Just confirm from your end if the microphone is working fine. And, of course, the screen share, of course. Is it good enough? Perfect. Liverpool logos is replying that the audios and the video stream, I think, both are perfect. All right. In that case, let's just now start with a very, very quick introduction, guys. My name is Nirav, admin owner of 50eyes.com website as well as 50eyes Market Analysis YouTube channel. And this is the weekly webinar series called the Trading Opportunities Webinars, wherein we come in and discuss trading opportunities of various global markets live in front of you guys, of course, every Friday. So far, we have conducted 176 of these webinars. 1 second here. Why is it not showing up there? All right, 1 second, one technical issue. Let me just quickly fix this. So as I was saying, we have conducted so far a total of 176 webinars in which we have captured a total of 441 trades. In the last 176 webinar, whatever trade setups we have discussed, we will first go over them and then see which of these have worked out or not worked out. Once we have discussed the or checked the discussion from the last webinar, excuse me, we will then go over the live chart and see how things have progressed. So for those of you joining in first time, we generally go live around 10 p.m. IST or 4:30 p.m. GMT, and this has been done for a quite long time. And other few different things. I'm not sure why is it not updating the 175th, 176th webinar here. Although I have pushed it on the website, we'll check that later. But anyways, the general way we go over these webinars is we go ahead and discuss the chart of Euro USD followed by crude oil, gold, S&P, Bitcoin, and NVIDIA is a stock we are covering these days. Hi, Manuel. All right, so that will be the sequence. And lastly, those of you not familiar, I've been doing this for many years. I have a very old track record since going back to 2016 when we used to cover the markets on a monthly basis. And we have everything covered here: the date when the webinar is conducted live on YouTube, the analysis, if there's a video, then the videos, discussed instrument, if it worked or not, and we have tracked the accuracy ever since it's publicly available. Anyone can check it, and it has stayed much higher than industry standards, and as such you can check it obviously. That's why there's this page of forecast accuracy. What else? Yes, for those of you who are complete beginners, there's a video course for beginners to intermediate traders called the Elliott Wave course. You can check the details over here. Those who are having some knowledge and would like to dive into intermediate to advanced concepts, they can look into the book Think with the Markets. There is a video course for this book as well, Think with the Markets exclusive webinar. You can check the details for that over here. And lastly, for extremely serious traders who have gone through my content already in details, they can inquire about the training program LT Batch. And we do also have a private Slack group where I post my live trades. You can request the details for that by going to the contact us page. That's about it for the very long introduction, and let's not waste any further time and go over very quickly to the chart or the last discussion of the chart of Euro USD. I'll just increase the screen size and let's now begin the discussion. So here on screen we have the chart of Euro USD as we were discussing it in the last webinar. Let's just go over and see what was the actual count. So here we have the count. We are expecting market to go down after giving an up move. I'm not sure why it's taking so much time to load. Anyways, so we were expecting the market will go up and then go down. Basically, the count was bearish, and as such, I had a very successful trade. So this was the expected classical trade setup of trend line. Yeah, this was the classical trade setup of trend line retest. That was the expectation from a swing perspective. Anyways, long story short, we were looking for bearish setups on Euro. I don't seem to find a trigger level. Generally, I do mention triggers. Yeah, there it is. 116,864. Let's just note it somewhere. 116,864. That was a trigger for short entries, and the invalidation was 118,183. So as such, what happened later on? Let's just go ahead on the live chart and very quickly check that. So you have the live chart of Euro on screen now. 116. The date was of last discussion was 3rd. There it is. 3rd October. So invalidation was never triggered. 116,864 is somewhere here. And as you can see already, the market did go below it and then went on to go lower and much lower. And obviously I was trading it. I was in it for the whole ride. We actually booked a lot of profit. I think either somewhere here or here. Majority of the profits, I mean, and the remaining was set for a trail. The trail was hit today, so we closed the entire shorts in profit. So by the way, just let me know if you guys are able to hear me clearly, because I'm not seeing much of a participation in the chat. Is the stream going just fine? Is the audio and video just going fine? What's the take at your end, guys? Just let me know very quickly. It does look like it has a lot of delay. Let me just very quickly go through the chat. There's General. Hello. Good evening, Ativat, one of our private Slack group members. Hello, Liverpool logos, and thank you for the confirmation. Hello, Manuel, one of our regular viewers. Thank you for the confirmation there, guys. Everything is great. Good. R singly. Long time no see. So yes, thank you guys. And yes, there it is, Joe, one of our private Slack group members and a regular viewer of our webinars as well. Anyway, so as I was saying, this was the setup, and now let's very quickly go ahead and discuss the actual trade here. 1 second, let me get rid of this. Here it is. Euro. Book partial profits on shorts, alternate view, blah, blah, blah. Added more shorts, October 6th. Okay, so we were having a short entry already. So that basically means we were already having a short entry. I just added more shorts later on. Let's check the second entry. And I'm adjusting the stop losses, etc., etc. Where is the second entry? Okay, that is the second entry. I did more shorts on 6th of October. So let's just quickly check the price we were in, and then we'll move forward from there. So the entry is around 116,750, and since then we were able to exit partial shorts at 115,806, and the remaining positions were auto closed because our trailing stop loss was 115,982. So this was the whole trade, which was done live in front of our private Slack group members, and of course live in front of our YouTube audience as well, because this was the whole forecast discussed in the last webinar. So +1 on our euro trades or euro analysis or forecast. This has worked out as discussed in the last webinar. This brings our tally to 442 trades discussed in the last 176 webinars have played out. +1. Let me just note that for the sake of record keeping. Could not run live for some time, but following all sessions after a day. That's good to know. And yes, before generally I used to wait for making the request, but if you guys are watching these webinars even later on or as live and are enjoying the content, do not forget to share it with the right audience, social media, Slack groups, private groups, whatever you have access to, because our views have not increased. I have been doing these webinars for, I believe, 3 years or more. Maybe I don't exactly remember, but definitely a long time. These weekly webinars have not gotten the right traction. So kindly make sure you do your part, guys. Every single one of you who is watching it or is live with me or watching it later as a recording. All right, let's now head over and discuss the chart. I just want to show you visually how much we have seen the movement in this market from a short trade perspective. Here's the entry 15806. Somewhere here is the exit 1, target 1, 982. So this was a trail for the remaining shorts, which was hit. Exit 2, or let's just call it exit 1 and exit 2. Entry. So here is the complete trade, and I would just go ahead and see how much of a percentage move we have captured. 0.77% or 0.00893. This is all the complete. This is the entire trade. Actually does look good representing it on the chart. Anyways, that was the trade, and now let's look at the chart analysis. The entries. Well, the idea was that this was probably a 3, probably a 4, and probably will give a 5. That's just definitely not working out. It's time to look at it from a different perspective. Let's just see. Actually, it can still work out. We can just remove this to move it there. All right, so this is the still the bearish view, and we are assuming that this market is still in a nested impulse in the downward direction. And by that, what I mean is that this market is in a five-way progression in the downward direction. Quite simply speaking, something like this is happening here. And from what we can see here, we have taken this as the point of reference. So I'll just remove everything and just focus on the point of reference. All right. So here we are assuming that we have a possible diagonal here. And then we have this kind of a progression. So we have the wave 1 complete, 2 complete, and we are within this 3. And within this 3, we expand this whole structure. We will find 5 waves inside of it. These are the 5 waves inside of the 3, so we can call them 1, 2, 3, 4, and 5. I'm denoting them with the Roman numerals for the sake of differentiation or degree nomenclature. Right, so right now it does look like we are in the Roman 2 of the circle 2. So this part, once this leg is complete, we do expect a downward movement on this counter. Let me delete this first. And if that is the case, we don't have to do much. We can look for short opportunities below. What is this? Breakout 115,468 actually. That's a conservative way. Below this, we can look for short entries. That's the approach or idea I have right now. All right. Second thing is we have a very clear, what do you call, invalidation level. If the market goes above 1, not even that high, but yeah, technically that's the 116,475. That is what you will call the invalidation level. All right. So that's the whole analysis for this counter. We are still considering bearish bias. There isn't a very strong reason to not consider it. This market has already given us, what was it, 0.07 or 0.77% down move, whatever it was. Good enough down move from here to here. Just check the initial part of the webinar or the last public webinar and check for yourselves. And at this point, I'll just ask you guys if you have any doubts or questions based on the analysis we have discussed so far. Just let me know in the live chat. If not, just type in understood clear. If you are live with me, do type in understood or clear. Of course, that's the point of live webinars. And once I have confirmations, I'll just move ahead to the next chart, crude oil. All right, thank you for the confirmation, Joe. With that, let's now head over to the next chart here. Liverpool logos is also saying all clear. That's good. All right, so let's now head over to our next chart of crude oil. And of course, I'll just load up the past webinars recording first and see how things have progressed. So we do have the last webinars recording on crude oil in front of our screens right now. The webinar was conducted on third. All right. So it does look like we have a bearish bias here, and we are looking for possible pullback, then down leg or straight down leg. Very clearly bearish bias here. Let's check if something else is said. Let's just play the thing at 4x speed. It is that is the case. We are assuming two possibilities. One is that the two is either complete here, which would mean straight down, or that two is continuing, which would mean up and then down. So I will not draw any more on a recording. And with that being said, we do have a very clear bias as well that below 60.78 we look for short trades. So I'll just note that down for the sake of record keeping and just show you guys what happened later on. We do have the live chart on screen now in front of you, and we are in a short trade on crude oil. 60.78, 60.78, 60.78. Where are you? There you are. There it is. Somewhere here we had the what do you call entry. As discussed in the last moment, it has already given a substantial move down. Substantial, literally, that is quite substantial actually. And here is the live trade on crude. Let's just show you in our private Slack group. This is a running trade actually, not also or anything. That's a running trade here. Let's see. Added shorts. There it is. Added the shorts at 61.012. Added more shorts at 60.882. And let's now check the live chart. I haven't closed the positions actually on this one. We still do have open shorts. One second, let me just check my position. That's going good. I still haven't closed anything, and but it is time now to adjust the stops. Where our stops were quite up higher. It was a swing perspective kind of a trade back then. All right, so now let's see what's really happening here from Elliott Wave count perspective. By the way, just to give you a visual outlook of our live trade, 61.012 was the first short entry. Let's just call that 61 somewhere here. Short entry one. All right. 60.882 would not be far away. It will be just somewhere here anyways. So again, short entry 2. So these are the short entries, and the stop loss was, I believe, somewhere here within this range. It has already given us a 1:1 trade actually. At this point, if I really want to, I can just book partial profits and then leave the rest of the position open with the trailing stop loss below our entry or at our entry actually. So that will be what you call a free trade, if you know what I mean. I'll probably look into it a little bit later. For right now, I think the stop loss needs to be adjusted. So let me just check the counts here first. We are assuming that and that and that and that. So the stop loss should be at least technically somewhere here 61.83 from a trading perspective. I will just keep it at my entry because once you are in big profits, you may see that some of the profits are not there with you after you have booked partial, but doesn't make any sense to go in losses. So what I'm basically saying is that we are short here. Let's just say for the sake of simplicity, let's just call 10 lots short. So since 1:1 is hit, what we can do is we can book 5 lots here, right? So that will be our pure profit, and we can leave the remaining positions on. But instead of allowing them to go and have a proper technical stop loss around here, we will keep the stop loss at or below our entry, even though it is not technically the correct stop loss. Reason being, we do not want to go back into losses once the position has already made us some profits. There's also another view of looking at it. If we have made, let's say, $1,000, $5,000 from here till here, then you can risk 2,000 of that by keeping the technical stop loss correct here at the correct level. That you can still do. Anyways, different people, different trading setups, and different philosophies. Actually, not people. Different trading scenarios and different market situations will lead to different philosophies on how to handle the situation. I will not go into too much detail. It will become a kind of a class here. Hello, Raghu, one of our private Slack group members, and of course, dear regular viewer, always attending the webinars, even if I am starting them quite late. Anyways, that's the whole trade scenario. I'm discussing trades in quite detail today. Anyway, so 1, 2, and 1, 2, and let's remove it. I think I had removed it. Let's refresh it. Sometimes TradingView does not allow us to see our own drawings unless we refresh the darn thing. So what I'm gonna do is, instead of focusing the whole thing and all the details, nitty-gritty details, I'll just gonna focus on 1 second here. I have another counter view here. Uh-huh. Uh-huh. Huh. Here's a comment from our dearest viewer, Joe. Your analysis was very good. I took this trade in short. I've already adjusted the sell, currently in profit, but I don't know how long the price will still go down. Yes, Joe, that's a $1 million question, I guess. If only we knew that, wouldn't we be billionaires in a single day? Do you guys know about Jesse Livermore in the live audience? It's a very interesting story that I just recalled from Joe's comment and my reply to it. Let me know if you guys are interested. I can just narrate it for you guys very quickly while we are doing this analysis. What? Nobody has ever heard of him. That isn't very cool. You guys haven't heard of one of the legendary traders? 1 second. This is 2, and then that's a continuation leading to the third over here. The circle degrees of a high degree. So the third must go here. 4, 5. I probably should have used another color there. It has become confusing. Yep, it is becoming confusing there. Let's just go with one count here, and let me just focus on the main theme here. Let's just take the last point of reference instead of wasting any more of the time. So from this point of reference, the price level is 63.1. What we do have over here is an impulse in the downward direction. This is what you call, this is POR2, actually this is POR1. I will have to put that for the sake of simplicity, not simplicity, clear understanding. So POR1 is an impulse in the downward direction, and which should look like this. Roughly speaking, if we are correct, then this would be the 1, 2, the 1, 2. So that makes this our new POR or POR number 2. So from POR number 2, we will have a third wave, and the third wave is supposed to be the strongest of the whole. And we are currently in the third, so that means we are supposedly in the best place and our entries are perfectly placed. All right, only thing we need to do is now adjust the stops or book partial profits and then adjust the stops. Depends on your entry basically. Anyways, so our entries were here 61ish level and a little bit lower 60.8 something. We are quite well placed. We can book partials here and put the stops for remaining at the entry or a little bit below it. But more importantly, since this is the third, we can expect a stronger down move and we can look for some target projections here. That's what I'm going to do now. So here we have some target projections. We can expect the market to go somewhere till the level of 56.97. And if it decides to go even further, then 54.615 even is possible. I'll just focus on 56. The further lower targets are quite lower. And actually, even before that, we do have another target here. $58.266. All right, so these are the main targets we are looking at this point in time. 58.26 is quite near somewhere over here. And then 56 is a little bit lower somewhere over here. So with that in mind, we do have some more downside remaining. And since it's the wave 3, we can wait and hope that it does hit our targets. If it was some other progression, we probably wouldn't be that optimistic about our targets. And as such, I think I'll just book partial profits before this week closes and leave partial position on. Maybe more than partial profits, maybe 50% or more, 60-70% of the position I'll close. All right, guys, that's it for the analysis on crude oil. Shorts have worked out again a +1. Went down as per analysis, and this brings over tally of trades that have worked 2443. Yeah. So let me know if you have doubts or questions. I'll wait for a few moments. If not, just type in understood or clear, and then we'll move over to the next chart. All clear, clear. What about other guys? There are a lot of people online I can see. Are you guys not able to understand me clearly? Anyways, we do have the confirmation. And let's now head over to our next chart of gold. And by the way, do let me know how's the audio. Is it still clear? At least it's clear at my end. It's clear. Thank you for the confirmation there, Joe. All right, all right, all right. Where is it? Thank you, Raghu. Thank you for the confirmation. Let's very quickly head now and check what was being discussed last time when we were discussing the chart of gold. So here's the recording from the last webinar on screen now. And let's see what was being said about this discussion in this discussion about gold. All right, so here is the discussion. We are looking, I think it's very clear that we are looking for upside, but I don't see any arrows. So what I'll do is I'll just play the video, go back in time a little bit. Yeah, there it is. That's a very simple setup. Breakout longs at 3892 plus. I'll just note it down for the sake of record keeping. 3892 plus. We are looking for longs. What are the targets? Let's just check that. So I'll just play the video here. You must have discussed some base minimum target 3997, I think. Let's just wait. Definitely 3960 at least. No. Okay, 3936 has been discussed at the target. Minimum, I guess, from a shorter time frame perspective. Let's just very quickly move forward. Doesn't look like we discussed anything else in this particular webinar as the target. And obviously, you guys know that has been smashed. The market has gone much, much higher than that. So here's the live chart on screen now in front of you guys. Let's see what was being said, what has happened since then. So here's the gold chart and 1H time progression, 39. Let's just check the date first. 3rd October was the time when we connected the last webinar. There it is, 3rd October. Somewhere here was the market. This is the setup 3892 plus. Here it is 3892. It has been triggered. So this is our long entry as per the last discussion, and 3936 is the target. So let's see where that is. That ain't very big of a target. So of course it was hit here. Target hit, and the market has surpassed the target quite substantially and hit the psychological number of 4,000 and actually even went above it. Anyway, so that was the discussion. Again, a plus one. So three of the analysis discussed in the last webinar have already played out. And in this particular case, targets have already been surpassed. How about that? We discuss 6 different instruments like always in the last webinar. We have discussed 3 so far right now, and 3 have already played out. How cool is that? Isn't that cool, guys? Hit the like button if you haven't already. And yes, of course, do take the request of sharing the content more seriously. This is 177th webinar and our views are not even crossing 500 numbers still. So kindly do make sure, if you are enjoying the content, to make more of these webinars. We do need more participation, which can only come when you guys show the interest. And yes, you can also comment on the video feed once the webinar is over. I think YouTube does take that into consideration as well, like commenting in the comment box, I mean, once the video is complete. Anyways, that's about it for the gold discussion. We do have the targets smashed from our last analysis. Now let's look at the live chart and see what's really happening. It is going to be an important point here. I'll just make it very clear once I have a full view of. All right. And since then we have, let me just go to Forex once again. I'm just trying to understand the higher time frame analysis here. And then we have a 1 here and 2 here, and then 1, 2, 3, 4, 5 for 3, down for 4. All right. So long story short, we can consider 2 points as our point of reference. Right now, what I'm seeing here is that that ain't that important actually. What I'm finding important here is the fact that if we consider this red trend line, this is the important point. We just have to extend it in time. All right. So here's the thing which is of importance. That's it. So as long as the market is above this red trend line, which I have drawn with white color, so white trend line for now, we will consider that the market is remaining bullish. We will consider that the bullish counts can hold. And if the market goes below this trend line, let's say it does something like this, and perhaps even retests it, then this can point out that a deeper correction might come into play, because this is not a short-term trend line. This is on the 4S time frame, and coming from 25th August, roughly. So, long story short, we need to be mindful of that. As far as the counts are concerned, there are two ways of counting it. One is that this whole impulse we started here is complete over here, and it will just fall, which is what we just discussed. Second idea is that this impulse is still continuing, and this is probably a nested impulse, or probably a wave for giving a minor pullback. So if it's a wave for giving a minor pullback, it can probably complete the pullback here, head up, or test this and then head up. Both possibilities exist. That's it for the take on gold. I'm not discussing the main count here. The reason being, it is not one count. We have multiple scenarios here. So, and there's also a case where this market can just simply go below this trend line and not give a deeper pullback as well. That will be the case of this is for 5 nested impulse with wave 2 in progression instead of 4. So this is not a hard and fast analysis here. Actually, the takeaway is that this market is still bullish. Idea is still bullish. This trend line is important, but only on a shorter time frame. That is the market. Maybe it can give a deeper pullback if it goes below it. Maybe it will just give a small pullback. Maybe it will be just this much, and then it will shoot up. What we do have clear over here is that whatever the case is, if this alert goes off above 4053, we'll look for longs again. It's a breakout long market. And let me just check if I can discuss at least one scenario with a little bit more clarity here. That will probably be better. But better for whom? Let me know, guys, if you have any doubts or questions so far. I'm just checking which scenario to discuss. There are at least 3 counts I can see right away. And if we try to go in detail, it will be a whole lot of analysis. Let me just point out the one which is suggesting completion. So here's this analysis which is suggesting that if we consider this as a point of reference around 3, 2, 6, 7, we can consider this as 1 and 2 and 3 and 4. And we can then, although I'm not very happy with this, actually not at all. This cannot be the end of it. Then we are in the fifth. That just suggests it's not over here. As per this analysis, we are in the fifth though. So let's just go with this one. This will be the trend line here, and we would like the market to sustain above it. And within this fifth, we will have 5 waves inside of it. So this is the first of the fifth. 1 second, why should we take that as the first of the fifth? We can take this as the first of the fifth, second of the fifth, third of the fifth, fourth of the fifth, and one leg up is remaining. So long story short, gold, we are still looking for bullish setups, and I just mentioned there are some bearish possibilities that may not really bearish, but deeper pullback possibilities that may suggest that this market can give a deeper pullback, but I'm not really in the favor of those possibilities. That's why I don't have an alert as such on the downward direction or downside of this market. Whole setup, the only setup we have is 4053 plus. We are looking for breakout longs. Can't be any more clearer than this simplistic setup. Let me know if you have any doubts or questions. If not, just type in understood or clear in the live chat. We will then move ahead with the next chart. How about you, Joe, Raghu? Liverpool, Arsingly, Manuel, Etivet, Resinual. Are you guys still with me? I can see there are a good number of people in live chat, but the participation is not that much. All right, so that's the setup of gold and Mason Pereira. Clear nice analysis. Okay, Mason, thank you. That means you have understood what we have discussed so far. Same goes for Joe and Raghu. And here's another comment. Liverpool clear. Cut it though as closed. My runner from 3269. All clear from Manuel. All right, guys. In that case, we can now head over to our next chart of S&P 500, where things are giving caution sign. So as always, let's first have a quick look at the last discussion of this counter before heading to the current live chart. Here is S&P. There it is. There it is. Let's check what was being said in the last webinar properly, and then we will head over to the current chart of S&P. Let's play this video and see what's being discussed. I'm unable to find a proper conclusive analysis here. So what I'm going to do is just let this video play out at 4x speed. This was obviously a discussion from last webinar conducted on 3rd. We are looking for a bullish setup, I believe. So we are suggesting pullback within this zone of the yellow box, and then up move 6750 plus is the long setup. So I think that is the whole analysis. 6750, we'll just note it down and then see how things have worked or not worked. Yes, 6750 plus is the level. 6600 is the stop loss or invalidation. Let's now pause this and head to the live chart, which is now on screen in front of you guys. 6750 plus. 6750 plus. That did go up. Didn't really do anything. Just went up a little bit. 6760, 10 points. That's not the way we were expecting things to work or not work out in this market. So what has really happened here is quite clear. It is not a very clear impulse. I had this as an alternate view. I think I've discussed in the public webinar. I'm not really sure if I have or I have not, but this was discussed or posted, I believe, in the private Slack group. So let me just check. There it is. Mhm. There it is. This was discussed in the private Slack group. September 19th, we have posted the alert STF resistance, and we have discussed the possibility of a market reversal with a possible diagonal formation. It didn't really exactly played out as we were expecting it, but it has unfolded it in a little bit different manner, a little bit later, actually, not in a different manner, same manner. Actually, that is the way, that is the notation I am using, that something might be happening here of extraordinary proportions. 19th September. So we were expecting the reversal somewhere over here. It has happened a little bit later. What is it? 66, 6700 something. It's about 60 points later. It is the same thing. It is a diagonal, yes. Let me first remove this cluster of alerts which are no longer of any use. So one thing to note is sometimes we are able to predict the reversals, but it is not always possible to pinpoint the exact date. The market can sometimes just go a little bit near our marked levels and then give the expected reversal. Yep, that is a diagonal. And this makes it important that we discuss our high time frame count now. Well, that is definitely a problem here. Look at this. It does not look like there's any problem with this count. This does look to be playing out nicely. And if that is the case, then that's a concern. That's a concern because this market then has a lot of downside to come. So now let's check what is that downside. Let's check the minimums first. All right, so we don't need this anymore. So these are the expected pullback zones: 63, 07, 60 to 60, 60, 30, roughly speaking. And of course, do not forget that this whole thing is a sideways. Let me just remove all the drawings. This whole thing is just a sideways zone. And the markets do tend to come back to the past congestion zones. So we can take the upper limit of this thing as the support level as well, 6490. These are the expected levels the market can come to, and I'm personally of the impression that it will smash through 6490, go to 6307, and perhaps even lower. But who cares? This becomes important because I'm expecting at least this will be smashed if this analysis is correct. Actually, it is correct. I personally will look for selling opportunities on pullback. I do not want to take this big of a stop loss on a weekend and wait. That just won't be that nice. So yes, this market will give us some very good scalp shorting opportunities. From a swing perspective, I have missed the train a little bit. I was quite involved with the other trades, but now that's the analysis. And yes, it is important to note that we were expecting a big market reversal, as I was pointing that out with my Slack post. But we were expecting it over here. What is this? 66.76. That's the mark level, or 6667 actually. Over here, I was expecting that reversal. And as I was mentioning earlier in this discussion of S&P market, sometimes do give us clear reversals. Only that the timing, it just messes the timing a little bit. So we were expecting it somewhere over here, 30th September, but it has happened now on 10th of October. So 10 days of a difference roughly. Now what it's really doing is we are expecting a wave 4 in the downward direction. It's a correction. So I have missed a lot of comments here. Let's just very quickly go over them. By the way, are you guys clear on what we have discussed so far? Just let me know. This is not a very simple analysis, I believe, but this is important. That's why I'm asking it. Actually, I do ask it every time, anyways. After the completion of the discussion, wave 3 can't be smaller. Yeah, you have Raghu answered your own question, I think, over there for gold, and we have left gold analysis. So let's focus on your question. 10% in S&P. It's the question from Raghu. Let's see. I'm taking it from the last highs around 6762. We're expecting 6490 roughly, so 4%. Let's move it to the side. Now keep in mind, we are just assuming the minimum is 4%. Target 2 is at 6. And if the market does decide to go further lower, it will go to target 3. That's going to be 10%. Surprising, that is. Our target 3 is at 10%. Although I'm not that bearish as of yet. I think the target 1 and target 2 are quite valid and should be looked out for. At least target 1 is definitely something to be sought. Right? Yes, we are in wave 4, Mason. That is the whole analysis. Let me just type it here. 1 second. Let me just do one thing here. Let's copy it and paste it. And yes, guys, don't be too excited about the targets and the downward movements. Always remember, we are in a wave 4. Wave 4s do have a nature of making things complex. That's why I had not removed the SOS signs from here. I was expecting bearish movements since here when I placed this sign here, SOS. Man, if only I had again came in and said that it's gonna reverse here, that would have been what. Just kidding. We are picking tops and bottoms all the time. But this one is important, as I said, because the movement is going to be is expected to be quite substantial here. So let's just mark the target minimum again. Yes, that's the target minimum. 6490 something, roughly speaking. Anyways, so wait for pullback for shorting opportunities. And as I said, I'm more interested in scalp shorts because I don't want to take this big of a stop loss. And even if we do take that, let's see what's the risk to reward. For target 1, it's not even 1:1. Of course, target 2 is good enough, but that's the reason I'm looking for scalp shorts. I don't generally look at risk to rewards. I was just looking at it to show it to you guys, the reason for considering only scalps at this point in time. All right, so let me know, guys, if you have any more questions If you don't have any more questions, just type in understood or clear, and then we'll move over to the next chart of BTC. Definitely keep S&P in your watch list and be very, very mindful of the different levels we have discussed. Also keep in mind that we are using this data feed, so different data feeds will have a little bit of a different what do you call price levels. So don't be putting on the levels. Also note which data feed you are in, etc., etc. So no, that's not looking good at all. If that is the case, even if I look at the most passive scenario, the most simplistic scenario where this market will not give a bigger correction. So let me just push it out in front of you guys. Why not? Keep in mind, this is just one analysis. I have multitude of possibilities which I can look at right now. I'm just looking at the most simplistic one, which is giving us the smallest downward movement. Don't ask me why, I'm just looking at it. Or perhaps do ask me and I'll probably answer it and will probably convert itself into a class. Anyways, so this is the least amount of bearish activity we expect on this counter. Again, keep in mind, this is not the main count. There are not mother, I mean, other possibilities which are bearish. I'm just discussing the least bearish one here. So even this is suggesting sideways and then down. And sideways movements in this case are not required to be very clear. So even in the least bearish case, we are looking for more downside. S&P is 500. Now let's look at the counts. Sorry, questions. No questions from Joe. Thank you, Joe, for the confirmation. Factor correction previously between July August 2024. So we have some statistical analysis from Raghu. 10% correction between July and August 2024. July, August, but that ain't very cyclical, right? We need to see it in September, October, or near September. Clear from Liverpool. Mason's clear. Manuel is clear. Thank you for the confirmation, guys. PX, I haven't checked that, but definitely you can check it yourself, Manuel. I'm pretty sure you are aware of the candlestick patterns. Mason has asked why. I guess that's for the question about why I'm considering the minimum. Well, that's a good question. At least somebody asked. I'm curious why others didn't ask. Anyways, the reason for only considering the minimum bearish possibility, Mason, is that if the market has to fall and has to give a crash, then it can definitely smash all the targets which we discussed. But that's not how generally things work in life. In life or in real practical trading, we want to know the minimums so that if we are short with, let's say I was short here with 10 lots. I cannot really practically expect the market to go and smash target 1, target 2, and target 3 and wait till target 3 is smashed. That's just not going to happen in real life, except for a few instances where I'm exceptionally confident. So, practically speaking, what I would look is for the first opportunity to get out of this position at least partially, let's say 50%. So the first 50% is important because once you are out with 50% position in profits, then you can do anything with the remaining 50%. You can let luck play out and actually wait for target 3, which may be very, very lower. So that makes the target 1 very, very important. And target 1 is always taken, or generally mostly taken, with the count which is least in your favor. So we are bearish right now. So the least bearish will give you the target 1, which you will be using for position sizing, right? And if I do any more commentary on it, it will, I have to say, become a very lengthy class because it's a very lengthy discussion in itself. Anyways, hopefully that answers your questions to a good enough extent, Manuel Mason. And I don't see any more questions. Everybody is clear. So let's now put an end to this discussion on S&P. And of course, before we head over to anything else, again, a very important request from me, and I have already asked it 2 times earlier, perhaps. Please share the content with your relevant connections. Definitely share it in person if you can to people and tell them the quality of the analysis because you are watching it, so you know it, right? Because we are still nowhere near any kind of growth on this public platform of YouTube. There has been zero growth in the last 3 years. Actually, the analysis previously used to go and have 700, sometimes even 1,000 views, sometimes not many times. But now it isn't even crossing 500 views. So this is a decline, not a growth. And as you know, it does take a lot of time to do this analysis and share it with you guys. Actually, sharing it with you is like 1 hour of webinar generally. But doing this analysis can take a lot time, which you can't see obviously because I'm not always telling you how much time it took for doing this or that analysis. So all that effort, I'm discussing it for free here, and I'm requesting you kindly consider it seriously to share the content. Again, everyone who is live, take it seriously. If you want these webinars to continue, I have done my part for a long time. I think it has been 3 years. I think definitely 3 years. As we started around 2022. So, what are you guys waiting for me to stop doing these webinars, reduce the frequency, or what? Kindly do your part. If you have some forums, some personal connections, look out for places where we can reach more public. Because there is only a certain point I can take these things to. As you can already see, we have actually reduced one webinar. The last Friday webinar is generally not conducted on public forum. So kindly do your part. I do want to continue the webinars, but we need more participation. Anyways, that's it for the request. I would really appreciate your participation in spreading the word. With that being said, let's now head over to our next chart of S&P. That's good to know, Mason. And sure, we'll share to friends who are interested in trading. That's nice to hear, Raghu. What about the other guys? I would definitely be very happy to see some comments on this. Mason, Manuel, R. Singley, Liverpool, and of course, Joe is always sharing. I already know that. Ativet, I'm not sure if he's online anymore. As you know, our first commenter. Where are you guys? Would you be interested in doing your part and sharing the content? Kindly share it with our live audience that you are sharing the content. That probably will motivate them. Excuse me. That probably will motivate them to share it. And here's a comment from Joe already shared. Most of my friends are French and have difficulty to understand English. So, well, that's a good thing you brought up, Joe. I have to point out at this point in time something very interesting here. If I go to my YouTube channel, I just uploaded some videos after a very long time, like a very long time. Let me just open. So these are the two videos we have uploaded in the last 2 weeks, and YouTube has dubbed all these videos in all these languages. You can just go and not sub. It has changed the audio tracks. You can check the audio tracks: Arabic, Bangla, Dutch, French, German, Hebrew, Hindi, Indonesian, Italian, Japanese, Korean, Malaysian, Polish, Portuguese, Punjabi, Russian, Spanish, Tamil, Telugu, and Ukrainian. So these videos are now available in all these audio tracks. So people from all over the world can actually watch them without any issue. Now, I did inquire with YouTube and they told me that they are not going to do it with live webinars, probably because live webinars are just live content and live content can have multiple speakers in the background noises, etc. etc. Maybe that's the reason. But that's some interesting thing which I just figured out. And share the content. And if we get the right amount of participation, probably I'll just go over and do the hard work of actually not me myself, but I'll hire a team and do the hard work of let them do the hard work of taking these sections out and putting them as videos. So once they are up in the video section, as YouTube is doing with the current uploads, it will convert the language to all the possible languages that they converted to the audio tracks and the subs as well. So that will be awesome. As for the live webinars, I think at least the subtitles are there in multiple languages. I think options. Oh, even subtitles are not in multiple languages. Okay, so the video is the way to go to surpass the language barrier. So that is some awesome news I had to share with you guys. And thank you, Joe, for mentioning the French language barrier. We'll possibly look to convert all the content webinar by webinar, part by part, like crude oil analysis uploaded as videos, gold analysis uploaded as videos, and so on and so forth. But then again, guys, it does take a lot of energy and effort. So, as I said, increase the participation by sharing it seriously, put in some effort. And once we have more participation, we will put the energy and convert the videos into multiple languages as well. And let me just go through the other comments. I believe posting winning trades in Twitter and X tagging it would help. Yes, Raghu, that probably should help. But then again, I haven't found the time to cut out these videos. And yes, you are correct. Once we do cut out small parts, people will probably watch more. So I'll definitely take that more seriously and put more of the winning trades on YouTube videos and share the links on Twitter, etc. In the meantime, you guys share it, and I'll definitely put more thought into it because now videos are getting converted into multiple languages. So that is definitely something we cannot take for granted, and we should make the most of it. Liverpool, thanks for analysis. Mate, I'm new, but will stick around and share for you. That's good to know from new audience. That does mean a lot. And Joy is saying, I didn't know that your videos was dubbed in multiple languages. That's impressive. Yes, thanks to YouTube, they are doing a lot of new things these days. Remaining to know is YouTube auto translate clearly understands your English accent. That's true, and they actually are transcribing it pretty nicely. How about each of your trade as a YouTube short content? That's something we tried to go in the past, but the shorts have a problem. You have to change the screen left and right a lot of times. Sometimes I will have to move the box from here to here to show the price, and then back here to show the count, and then back here again. So it takes more efforts, and it's not really something people will be understanding with the what you call clarity. We do have some shorts here, and they themselves haven't seen much of success here. Well, actually, they have some of them, but generally they are stuck around 200 or 100 views, except for the one where I am showing my own setup, office setup. I mean, anyways, so shorts I'm avoiding for the reason they aren't very clear and people can't understand things properly. But the video thing, I'll look into it with more seriousness because of the auto dubbing thing. And perhaps once the videos pick up, we'll probably look for shorts. Yes, I think you are mentioning the part sections of the webinar. All right, guys, thank you for the participation and letting us know that you will be sharing the content that does motivate us. And I'll look forward to sharing more of these clips as videos. That was a very long discussion. I don't think I've had such a long, lengthy discussion in a public webinar before. Or probably I have had, but it's been a long time. Anyways, thank you for the participation, guys, and thank you for sharing. And with that being said, let's now head over and check the last two charts: BTC followed by NVIDIA. BTC, where are you? Of course, let's now head over to the last discussion from our last webinar before checking the actual live chart. So I'm just going to let the video play a little bit here and see what was being said. So the price, let's note, is 123020. All right, let's play the video now. And targets are 170, 170, 000, so on and so forth. I don't seem very keen on this analysis because I am just not drawing anything on the charts, it looks like. Anyways, the idea is that we are looking for more bullish activity, and the super bullish counts were suggesting 170000 as the incoming target. Let me just check very quickly if there's something else we have discussed. Not really. We just discussed the bullish count. So now let's just head over to the live chart. So here's the live chart now on screen in front of you guys, and let's check how things have changed since the last discussion, because they definitely have changed. Thank you, Liverpool logos. So it is not really following the count, to be very precise. It's not following it at all. I mean, it is following it if we move the 4 here, but that wasn't the discussion. We were expecting above 123, the market can go to we were expecting 170, so definitely everything in between was a target as well. However, it does look like it has given a wave 5 completion here, which is not bullish at all, which means a wave 2 of a deeper degree is in play, and which also means that this Roman 1 followed by this Roman 2 can have a 50-60% retracement. Let's see from where. From here. So that's the updated analysis on BTC. It is not looking bullish right now. We are now looking at a corrective structure. We are still considering the bullish count. We are expecting that in a higher time frame analysis, this market is still going to smash those targets, perhaps. But that is only going to be possible if we see market take support probably within this region. Let's use a different color. Probably within this region, or at least above what is this level of invalidation, 109,300. So this will be your what you call invalidation level. Below this, we can say this market is not really bullish anymore, and currently we are expecting support in the range of 117,735 and 115,670. So these are this is the range we are expecting the market to give support in. All right. And as such, I have to make another comment here. It doesn't even look like it's going to hold that support level, because this looks extremely bearish. So I'm definitely not inclined to take any long trades on BTC, and you shouldn't be either, unless this market sustains above 121,972. So only above this level will we be inclined to take bullish consideration back into consideration. I mean, bullish analysis back into consideration. And as such, we are expecting support within this range. So it's a wait and watch market, because it isn't really behaving as we expected it to. As far as counts are concerned, we can definitely consider this as a possible complex correction. Although I don't think that's of much relevance here, because as I said, we aren't very keen on this market right now. It's just a wait and watch market for now. So let's leave it at that. I don't think there should be many doubts here, but if there are, just push them in the live chat quickly before we move over to the chart of NVIDIA and see how things have progressed there thus far. All right, so that's it. BTC and understood. Raghu is clear. I believe others are clear as well. And let's not waste any other more of the time. This webinar has actually gone quite longer than we generally do. All right, so here on screen is the last recording from for the discussion of NVIDIA, and let's see what's being said on this chart. Why am I not drawing anything? Let's just move it back a little bit. Thank you, Joe, for the confirmation. And here's the comment from Raghu. Could NVIDIA show contrary movement? Let's just first quickly check the last discussion, and then we will take that question. All right, so here's the idea: pullback and then up move, and I guess that is the main theme here. Unless I missed something from my own analysis. Yeah, straight up move may be possible, but I'm considering pullback and then up as the. I mean, basically, we are looking for bullish activity, or considering bullish activity as the main theme here. Here is a live chart of NVIDIA on screen. The discussion was last connected on 3rd of the month. Third, where is third? There it is third. The market hasn't really done much of anything. It did go up, but I wouldn't call it a proper analysis playing out kind of move. So let's now see what's really going on here. So here's the comment from Raghu. Could NVIDIA show country movement to S&P? Well, country movement to S&P. Let's check that. So S&P is in a wave for correction. In a wave for correction, it will give a deeper pullback. If not very deep, then at least some downside is still remaining. As for NVIDIA, let's see what's the high time frame count suggesting. So we can just all right. This isn't relevant anymore. Let's remove it, remove it, remove it, remove it. All right, so it's not looking good for NVIDIA. So what I'm doing here is I have just quite simply drawn a wave 2 to wave 4 channel. Now here's the problem here. Yeah, Raghu, I got your question. You were asking if S&P, if this is SPX chart and SPX can continue sideways to bearish movement or bearish movement, but NVIDIA can go sideways to bullish. That may have been possible, but as I just checked in front of you guys, we have just drawn the 2-4 trend line. And as you can see, the market is not really sustaining above it, which is not good, which is generally a bearish sign. Although NVIDIA is so far doing well, it has given move below the channel, then went up, move below the channel, then went up, move below the channel again, and went up. So it kind of seemingly has a trend of doing it, but again, it does not show any strength at all. As such, I can actually just call it as the fifth, perhaps complete here, perhaps a diagonal here, just like S&P. Who knows? Maybe. Oh my, that is a diagonal here on S&P with a diagonal on NVIDIA. Interesting, super interesting. So this market is in alignment with S&P. Look at that. How clearly is it in alignment? It is also forming a diagonal literally at the same time. Isn't that interesting, guys? Yes. Raghu, isn't that interesting, Joe? So, anyways, that means if we are following a set group of stocks, I mean, not if it's a known theory. I have mentioned it in my book as well. I think that if we are following a set group of stocks that generally do represent the index, that is the top 10-15 stocks, then we will be able to predict the market reversals before the index itself predicts the reversal. That's the foresight you gain only on an indices, because the indices have underlying stocks which can give some foresight. We don't have that luxury on commodities, generally speaking. Anyways, so here we did have the foresight. Now let's see how things will progress for NVIDIA from here on. Where is that Roman 3 coming from anyways? Oh, that's 3. That's definitely not a 3 complete. That's definitely dot dot 1. And that's not a 4. That's a dot dot 2. Yeah, that's the kind of response. Incredible. Yes, that is incredible. All right, now here's the issue here. I am considering that from this point of reference on NVIDIA, we are looking at an impulse in the upper direction. Now the problem is, unlike S&P, this is forming a wave 2, from what I can see right now here at least. And a wave 2 can have deeper correction. Not always, but it can have a deeper correction, which itself can be a problem. Because if this market is giving a deeper correction, 50-60 is coming out to be quite low. Very much bearish. There you have it. All right, as I said, this is not looking good for NVIDIA. Even as such, we are looking for support around 170 levels, followed by 154, 141, 128. Not much of a point in looking at all those levels. 170 is the main one, and the immediate next 153. So we are expecting bearish activity may pick up on NVIDIA. Uh, Maxwell Smart would say very interesting. And who is Maxwell Smart? I'm not really sure. Huh. Anyways, cool, trying 4K again. We'll look at it once our alerts are triggered. Who is Maxwell Smart? Is that a personality? Let me just very quickly check that. Anyway, so as I was saying, on is a Holocaust survivor and subject to 2019 documentary Cheating Hitler Surviving the Holocaust in 2023. Okay, I'll probably have to read more on that later on. I'm not very. Oh, TV spy. Got it. Got it. All right. So coming back to the analysis, when will this become valid? When will this downside become valid? Because as we know, Nvidia has been in a deceptive mode for quite some time. It has deceived us, gone below the trend line, gone below the trend line, gone below the trend line. So if it does it so many times, you do get the impression that perhaps the market is going to fly, and perhaps the market is going to fly. And when you get that kind of feeling 3 times and then it doesn't fly, then that's the issue. So where do we draw the line? Where do we make sure that it's probably not going to fly? Over here, I would say for Nvidia below 183, we are not going to be bullish anymore. 183.39 actually. So below that level, we can say convincingly that even if the market is going up, we don't really care, because it has broken the trend. It has broken the series of high, higher high, higher high, higher high, low, higher low. Let me just draw the lows. Low, higher low, higher low. So once this higher low is broken, this is basically what you call classical DAW theory or trend analysis. This is absolute basic of the basic. So once this is broken, we cannot really convincingly say this thing is going up anymore. So this is absolute bearish movement confirmation. Or even if not bearish, we are not interested in longs anymore. 183.39. That's it for NVIDIA and TV Spy. Manuel is saying so. I'll look into that. Is that's a good show? I'll probably check it out as well. Although I haven't really found much of a time to even check my Netflix subscription. It's been running for 2 months, 3 months without me watching. I mean, nice analysis to you know both S&P and Nvidia. All right, guys. So let me know if there's anything left as per our discussion on Nvidia. Definitely bearish. We have discussed the level for it to what do you call confirm the bearish activity. And as such, on the upside, we aren't interested in anything unless the market breaks out to the last high. What is this 195 plus? So there's not much of a point. I'm convinced that we have to focus on the bearish activity given the circumstances in the index. So I'll wait a few moments. If you guys have any doubts or questions, you can just let me know in the live chat. If not, just type in understood and clear, and we'll say goodbye for the weekend for this webinar, and then we'll meet again in the next one. And of course, those of you who are members of the private Slack group, we are connected already. So it was a lengthy discussion. How long? 1 hour, 32 minutes, 38 seconds plus. And that is probably the lengthiest webinar I have done in the past many months, I think. So that was interesting, and time just flew. I didn't realize we had gone that much ahead of our scheduled or expected time. All clear from Joe. That's good to know. And Raghu, wonderful analysis. Nirav, have a nice weekend. You too. Raghu, have a nice weekend. You too. Joe, have a nice weekend. Manuel and Liverpool logos and Mason and R. Singley and everybody else who joined in the webinar. And of course, thank you guys, those who stayed till the very end. That just adds a kind of a flavor to the webinars that people are participating and staying till the end. That's just nice to see. And that also motivates me to continue doing these webinars more. And of course, many of you guys have already promised that you will share the content. That's awesome. And I'm hoping that that will bring what do you call a positive vibe in the webinars, and we'll see much more of people and much more of views. Joe is saying, thank you again for the remarkable analysis. Gonna particularly keep watching S&P and crude oil next week. S&P definitely for scalp shorts. Crude oil, we are already short. What else is remaining? Euro USD. It's something we have to be mindful of. Euro. It wasn't very clear. And what else is remaining? Gold. Yes, gold. Gold. Gold also. Let me just give my final stance. What should be the stance on gold? Scalp longs. Look out for scalp longs on gold. Clear. Thank you for the confirmation there, Manuel. See you next week. Definitely, Joe. Number one. All right, guys. Thank you for the participation till the end. Thank you for those who will be sharing my content. I hope all of you do. And I'll see you guys in the next webinar. For now, I'll put an end to my words for now, and see you in the next webinar. Take care. Have a good weekend. Enjoy, and bye for now.